Hi everybody, this is Gary Dean and this is our nightly video report for Tuesday, March 8th, 2016. So we saw a little bit of follow through to the downside yet today, and I'm not, going to stick a fork in it and say the top is in. I do believe maybe for this push higher it may be in. And I think tomorrow is going to give us a lot of information, and I'll explain why. But the overall pattern, I'm still viewing this as a counter trend rally, and the overall trend is down. Reason why is, each time we get one of these rallies, we're not taking out the previous highs. So by definition, that is, a downtrend. Where this B stops, or this wave B that I have it either could have stopped right here, or maybe it has to push a little bit higher. We have to wait and see. But for this move up, it very well could be done, and let me show you why. First off, nothing new here. We have the bearish divergences. There's still plenty of room to go before we're into the oversold levels. We broke through this wedge right here. Now, what that typically means is they're going to come and test the base of the wedge, and that would give us a target somewhere down near the 1890. I'm not sure if that's what's going on. It might, but just this pattern, that's what they would be calling for. As far as the reason why I believe this move may have done it is, if I have an A, B, C move, and now right now this broke up into an A, B, C move of a C. So this could have done it, but this also could subdivide again into, an A, B, C of an A, and then we come down, make a B, and then make another wave C up. That, we're not really worried about that. We're just going to concentrate on if the S&P holds support, then we're probably going to scale out and move to cash. If it starts breaking through, then you just let it ride, because we're probably going to be heading a lot lower than where we are right now. But the reason why I'm saying tomorrow is a big day is, if you notice where the moving average here is at 1980 or 1979, and that's pretty much right where we closed. So last time we had a big day like that and it closed on this, we had this day. I don't believe that is in play right now, just because of the time factor and no breaks. It would make sense if we push down a little bit more. So if we break this, really what you would want to be looking at, the next support area would be the 1962.55 area. And then what would make more sense is a test down to this, the 1930 and even the 1920 level. If the bulls hold this support in this area here, then it would open up the door that this is just a wave A. This was your wave B, and now we're going to make another move up for a wave C. But again, we need more time to figure that out as far as what's going on. And really, what I'm looking for is to see how the bulls react to the 1962 level. And one of the reasons why is, if I just this is one of the other wedges that we had in place, let's say, and this is when we were running, and you can see when we broke it, we made it down to this low here, then came back up and back tested this triangle. So we could come down, say, to these levels, and then come back up and back test this triangle again, and then head down after that. So there's a lot of different scenarios that are in place, and I don't want to confuse you on this, but I want to just kind of leave it at, okay, if the bulls can take it through the 1980 area, this moving average, then we expect a quick move down to the 1962. If they lose that, then we're coming all the way down to the 1931 or even the 1919. The bears need to hold it below the 1994 to really put a lot of weight on the market, on the S&P coming down here. But again, we have plenty of room to go before we're into the oversold level, and these bearish divergences have really been extended for a really, really long time. And if we look at, what happens when we have these really, really extended bearish divergences, like this is one here, the drop is very, very fast. So this one went to 2117 all the way down to 2018, 100 points. And this was from 11.3 to 11.16, almost 2 weeks. So that would fit the profile. I would take it if we got 100 points down from here. That would bring us someplace down into these levels here. and then we may be able to pop higher, or that may be the end of it. So let's take a look at the 15-minute chart here. And again, you can see we're right at it. We possibly have some bullish divergences, but again, this is a support area. If it loses this, then we're probably going to see that quick move down to anywhere between the 1960 to the 1946. That's where I may scale out of some of these, because I was wrong on this direction here, and I don't want to roll the dice. So I would maybe roll it with a small position. But when it comes down, remember, my one thing I was looking for was, just to hold on, and when it comes down, then break out of these and kind of start with a clean slate again, with maybe a minimal damage to the to the portfolio. But tomorrow, this is, again, we're at a moving average, and if the bulls, if they gap down, that's when I wouldn't be surprised to see us come down and test this 1944, 1950 area. Now, on a 5-minute chart, you can see we possibly, we didn't really, we made a little bit of a little low, but this was the 38% retracement. You can see 50% is 70 and 61. This is really the decision line. I've had this down here, so a push down to 1961 makes sense. What I want to do is really just see how the bulls react to it. If they lose that, then we're probably heading, a lot further down. If they hold it, that's when we want to start making some decisions with our open positions right there. And if we can get out at the 1961, it's probably going to be a very, very minimal loss, maybe under $100. But with being wrong on the move, that's not that big a deal. So with that, let's see what they decide to do tomorrow, and have a great night.